U.S. may be heading towards a recession. What's fascinating is that the stock market is typically a very poor predictor of recessions. We've had 13 recessions since 1937, and in many of those cases, stocks actually went up in the 6-month period prior to the recession. This time, it's looking very good at predicting a recession because all of the indicators are moving in the same direction, which is rare. Now, we really have two big hits coming at the same time. You have the coronavirus hit, and you have a second hit, which is the big decline in oil prices. What's caused that decline is the battle between Russia and Saudi Arabia, which has dropped the price in a couple of weeks from over $50 a barrel to around $30 a barrel. Because of that, the entire shale industry in the US is being endangered. Shale is very profitable at $40 and up, and it's very unprofitable at $30 and down. If investments in the shale industry decline, the US's role as a major oil producer and exporter is going to be jeopardized, and that could cause a big hit to our economic growth going forward. The coronavirus has hit so many industries hard. For example, it's hit airlines. You've had all of the major airlines issuing profit warnings. Hotel operators, retailers such as Macy's, Microsoft's supply chain, and Apple's supply chains from China have been disrupted, which is also hurting their sales.
This is not a financial crisis. This is just a temporary moment of time that we will overcome together as a nation and as a world. However, to provide extra support for American workers, families, and businesses, tonight I am announcing the following additional actions.
President Trump has announced 3 measures to counteract the effects of the coronavirus hit. One of them is to extend $50 billion in low-cost loans via the Small Business Administration. A second one is to delay tax payments that both companies and individuals will make. We don't know the details of that yet. And the third one is the proposal to eliminate all payroll taxes, both on the employer side and also on the taxpayer side, for the rest of the year. That's the biggest one. That would certainly put a lot more money in people's pockets, but we don't really know what the effect of that would be. We're already facing trillion-dollar-plus deficits going forward. That really scares people. Big stimulus packages that have been announced by countries such as Italy, which has been hit particularly hard by the coronavirus outbreak, by Australia, by the UK. President Trump has presented a couple of these stimulus plans, but whether they'll work or not is highly uncertain. What would work, on the other hand, is rolling back the tariffs on Chinese goods. This is a deadweight hit to the US economy that's costing probably a point of GDP a year. This recession would be very different from the one we encountered in 2008. The recession in 2008 was caused by a huge run-up in housing prices that was caused by credit that was much too loose. We all know the liar loans. We all know people who defaulted on their mortgages, who bought houses that they couldn't afford. The demand that was stoked by all that easy credit pushed the prices way up. Then when those prices collapsed, it caused a big pullback in both investment by companies and also in wages, employment. It just rippled through the entire economy. Now, that is not the case today. We don't have leverage that's too high in the consumer sector. The amount of money that consumers and the average person are paying on their loans is much, much lower than it was then. There is no housing bubble. So the coronavirus is obviously a temporary phenomenon. The hit can be very deep for a relatively short time. It's unlikely to last as long as a housing shock would last.